So here are the 4 key points to consider when it comes to selecting or choosing the best broker. Now, if you like to trade Forex news, like events, like I did in the morning, 4 o'clock in the morning, I was trading interest rate NZD USD. So we had a sell on NZD USD. And I've made this profit, I've made some withdrawals. But then I've made some losses when I was trading gold. So now, when it comes to selecting the best broker, there are 4 key things to consider. First, stop out level. Second, the spread, leverage, and account protection balance, which is the negative protection balance. Now, let me explain some of the things for you to understand so that you can be able to select the best broker and to trade the foreign exchange market. All right, let's actually make sure that you open your trading app. If you have a trading account already, that's good. If you don't have a trading account, just head to our YouTube channel, all right, and just subscribe to Bozza the Trader. Now, I was trading the NFP on this day. I was trading the NFP on this day, right? September. I was trading the NFP on gold. It was a buy. So I've made this much. So I want you to understand some of the things when it comes to trading. Whether you're trading the news, which is the fundamentals. If you're new to fundamentals, we have another tutorial here where I explain what are news, what is actually are we talking about when we talk about news events. And if you like to trade technical, so there are 2 things that you can consider when it comes to trading Forex. You can trade technical or you can trade the news, which is trading under just 1 minute, just like what I did today. So subscribe to our YouTube channel and click here, right, to join our free WhatsApp group, right? Here's our free WhatsApp group link to open your trading account. Here's our brokers that we use, and here's our website, bozza.com, for you to actually open a trading account. So with that being said, let's actually go ahead and open our trading app, MetaTrader 5, so that I can explain these 4 key things, and I'll add some tips for you to consider when it comes to we're expecting to take a sell on gold. So yeah, but anyway, let me explain some of the things so that you understand what you're looking for. Now, first thing, let's go to trade section, trade. Now, I've mentioned that we have a stop out level, and I'll keep it simple. Stop out level, let's say in this case we go to, let's go to our AC markets account. I've opened some trades there. We're there to £2 account. We've made a loss in the morning and we're in a loss right now, which is a good thing that I will explain much better to you for you to understand. You see this margin level here. Can you see this margin level? This margin level, it's a monitoring tool to monitor what? To monitor the equity. This equity, the money that you are profiting here or losing. All right. So this margin level monitor the equity. All right. Now, the margin level is what? A stop out level. So what it means that if right now you lose, it goes to 50 here. If you see now it's 95 or 91, 92, if it goes to 50, these trades will be closed automatically without you doing anything. So that's the first thing that to consider. If you trade news, I'll actually give you tips, the brokers that I recommend for you to actually use and why you should use them. Now, if you're trading a GBP/USD, any asset or financial assets, all right, that you like of your choice, especially if you're trading foreign currencies, you can use IC markets, all right. You can use IC markets. You can also use the FXView, given that you are trading the technical, not the fundamental, right? Because you don't have negative protection balance. We'll get you to that. So the margin level here is a stop out level, meaning that if you lose 50%, the trades will be closed automatically. So you'll be left with some small balance. How is it calculated? It's calculated in this way. You see here on margin. Margin is the money that you need. I've mentioned many times over and over and over again that margin is the money that, not free margin, margin is the money that you need to actually trade Forex. So meaning that in this case, for us to open 0.01, 2 times, we need £2. I trust you understand. Because you can see that our account here is in a GBP, which is a pound account. Now, on the 2 here, you can see, right, on balance we have 2. So the money will move from balance to margin. Now that we have a money on the margin, we have a free margin that is actually now floating. If we look at the free margin here, The free margin is based on that the margin and the balance is actually minus, meaning that you are left with this. So that is why the margin level is calculated in actually what? In percentage form. That it actually monitor the equity. If the equity, just to keep it simple, if the equity goes to 50%, that means that on the margin here, we will lose £1 and our account will be closed. The trades will be closed and we'll be actually left with what? We'll be left with £1. So that's the meaning of what? The stop out level of 50%. So now let's go to the spread, all right? And we have another tutorial in our channel where I explain the spread, what you need to know about the spread. Can you see this number here? So this number will eat away your profit if you are not careful enough. Will eat away your profit. So that is why it's best to actually use brokers that actually offer you a lower spread. Let's just go to no, it's fine on IC markets. All right, if you compare, right now let's compare the GBP USD. You can see the GBP here, it's 1. If you compare it to maybe another broker, let's say you compare to another broker, no name broker that you're using, and you just go to, let's go to this one, sign in, go to codes and look at the GBP USD so that we can actually compare, so that we can be able to see here it's 3232, sometimes 1. So that is why it's best to use brokers that they have a tight spread like this, so that you can get fast into profit, even if you're trading the news or you're trading the technical analysis. Now, we've mentioned the spread, we've mentioned the stop out level. Now we go to negative protection balance. Negative protection balance is that if right now you lose, like you make a loss, like go to negative. Let's say in this case, most of the time, if you're trading the news, the account will actually go to negative here on balance here, meaning that you'll have to pay back that money before you start trading if a broker doesn't offer you a negative protection balance. So it's important to understand that brokers that are good, the brokers that they offer negative protection balance, especially when you're trading the fundamental, which is trading the news, right? Like you want to trade the NFP, you want to trade the interest rate. So it's important to actually trade with brokers that offer negative protection balance. In this case, we have what? We have IC Markets doesn't offer that. FXView, they offer negative protection balance, and Deriv, they offer negative protection balance. Blueberry, they do not offer any negative protection balance. So if they change those rules, that will be better because it will actually favor you to actually not pay back this money because you are trading on leverage. Now we've mentioned negative protection balance, stop out level, spread, and we're left with leverage. Remember, when I trade in the financial market, we're trading the market on a leverage account. So meaning that the actual money that we need on margin is actually divided because of what the leverage that we're using. In most cases, I recommend that you do not use a leverage that is more than 1:1,000, right? If you're using leverage that is more than 1:1,000, then you'll be actually on a losing journey because you'll be risking too much. You won't actually be able to set a stop loss according to the risk that you'll be actually that you like to take. In this case, how many points that you like to risk. In this case, if you like to risk from this point to this point, you'll no longer be able to risk this much because of what? Because of having more leverage. So having less leverage is actually good, but make sure that it's maximum at 1:1,000 or maximum is 1:500. In this case, we have our Deriv broker here, and let me just refresh this page so that we can be able to compare some of the accounts that we have when it comes to trading on leverage. So leverage is there to assist you to have what? Let's actually compare the accounts. We click here on compare so that you can be able to see. You see here on Deriv, the leverage is fixed, which means it's fixed to 1:1,000. There's nothing wrong with having 1:1,000 leverage, but you gotta know that if you have a leverage to 1:1,000, if the account goes to 50%, you will lose everything. You'll not be left with something. But if it's 1:500, given that you're trading on a broker that like IC Markets, then you'll be left with something. Because in most cases, you'll find that the margin here is less. That is why you will lose everything when it comes to trading with high leverage. So you gotta be careful. And here's my tip, right? Here's my tip. When you're risking, remember the margin, you must always make sure that you protect it. How you protect it? If the margin is 2 here, at least on balance have £4. Do not have 2. right? So that you can actually what risk well and set a stop loss where you like to set it, right? Have more money on balance than on margin. Free margin, according to how I understand it and how I want you to understand it, free margin is the money that you'll be risking. So at least have the money that you'll be risking on free margin. In this case, if you're risking $2 here, £2 here, have £4 here. Trust me, understand. Have £4 here, and on balance have £8. Then you'll be on a much safer position to actually trade GBP, USD, any financial market that you like. So now about recommending the brokers. The broker that I recommend for you to trade Forex, we have IC Markets, we have FXView if you like to trade using the ZAR account, because IC Markets doesn't offer the ZAR account. Only this one is actually specializing on the ZAR account. Is regulated in South Africa. You can check off also if in your country like UK, if it's regulated there, but then you can just register a trading account with FXView, with Blueberry, with IC Markets. So with Deriv, it's actually, this is a special broker that I use personally because of what? Because of the assets that they offer. Like you cannot get this asset anywhere else, like this boom 1000, crash 1000, volatility 75. If you have seen me trading these assets, then that simply means that you gotta understand that these are the assets that are offered by Deriv. So for you to actually open your trading account, you just open your YouTube app, right? You search Bozza Trader and you subscribe to your YouTube channel. The first thing that you do, make sure that you subscribe and you hit that notification button over there so that you don't miss any updates. Then you click on this link over here, and you can visit our website too, bozzatrader.com, and you can click these links here. Okay, this is for Deriv, this is for Blueberry, IC Markets, FXView. This will lend you to the website of Deriv so that you can be able to open your trading account. You can also watch the tutorials that I provide for you here to learn how to open your trading account. I trust you understand. I love you all. Stay blessed. I will see you on another tutorial.